Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 9th of August. And surprisingly nice little flip over the course of today's session. So after the dithering either side of the 50-day moving average, the blue line there around 75.40, and also either side of the neutral 50 level on the FTSE's RSI, we've actually got a push through RSI 50, which is a nice development, and also we're heading towards the 200-day line 76.12. That's been rising, so that was the positive in the recent past. The negative was that we'd fallen below RSI 50, but it seems that we've got a rising trend channel there, shown in red from the end of June. Top of the channel there, heading for 78.50, and above the floor of the channel 7,500, and especially above the 50-day line we're looking for 78.50. Hopefully by the end of this month. So a little bit of a change possibly while we remain above 7,500. On to the DAX, and here the position was and is that we were finding support at the floor of that rising trend channel from back in August last year. 15,700, the nominal support area. We're looking for an end of day close above the blue 50-day moving average at 16,000 to then take us up to recent highs at 16,500. Best case scenario, maybe by the end of next month, is that we head back up to the top of that channel from last year, up to 17,300, but let's get back above the 50-day line first, and also back above the neutral 50 level on the RSI versus 47 at the moment. Moving on to the Dow, and here you can see that we've had the market sort of trading either side of that March resistance line target. That was around 35,200, and finding support above old resistance, so call that 34,600, the initial July resistance, and also the peak in June. So our downside hopefully above 34,600. If we break through the recent resistance, 35,600 plus, then there's a chance of heading towards the top of that one-year trend channel, similar to the DAX, in this case up to 37,300 by the end of next month, but hoping that the floor is in on the Dow. On to Bitcoin, where we're also hoping that the floor is in this case, we were looking for a break of that July resistance line, which we got around 29,200. Still looking for an end of day close, a proper one above the 50-day line, the rising 50-day line, and also 30,000. And then we could be back in business in terms of hoping this market will head up to the top of that rising trend channel from August last year as high as 36,000. I suppose at this point we're looking for that by the end of next month, but you never know, this market may be strong enough to surprise us. On the downside, not really expecting now much below the May-June resistance at 28,000 dead. On to the stocks, and starting off with Bradda, which looks like it's finally turning around, which is maybe a relief to some. We've broken under this falling wedge, which has been in place since April. Bullish divergence there with a lower low for the start of August, and I suppose all we're missing now is really end of day close above the 50-day moving average at 4.3 pence to give us an initial target there as high as 5.4 pence, hopefully by the end of this month. Be nice to see the gap down that we had back in June close. That was around 4.7 pence, so I suppose that's the initial target, and then 5.4 after that. Upside valid while we hold above the 3 3/4 pence level, which was that April resistance line. On to a requested stock, which is Cizzle, and here a bit more Cizzle than we've had for quite a while. We've broken through recent neckline resistance, that was around 2.2 pence, also broken above the 50-day line for the first time since May, which is obviously quite an achievement, and back above the rising 200-day moving average. So that suggests maybe 2-3 weeks down the line we'll be going into a golden cross. That is the strongest part of the cycle normally, and the initial target here up to 3.2 pence, which is that April resistance line projection. So hopefully after all the consolidation, Cizzle's finally on its way. On to Cornish metals, and here surprise inclusion, I suppose, but we did actually gap up through the 50-day moving average at the end of last month, or the middle of last month actually. Now we've cleared July resistance and the 200-day line. Initial target here 17 pence over the next week or two, maybe up to 22 pence by the end of next month, which is a September 2022 resistance line projection, but it's a bear trap gap reversal from below the June support there at 11 pence. Ideally we stay above 13 pence along the way. Another unfilled gap to the upside from Cyanconnode, and here we can see that it's a decent setup, even though obviously this is a rather liquid situation, but gapped up through the 50-day line, which is what we like, and is now back above the 200-day moving average around 16 pence, so quite similar in a way to the Cizzle chart. End of day close above the 200-day line above 16, and we're looking for 20 or 21 maybe as soon as the end of this month. Moving on to a stock which I was very cheerful about. I think yesterday we had a V-shaped bull flag there on the Edenvile daily chart. We've broken last month's resistance at 12.4 pence, and above that looking for as high as 17 pence by the end of this month, and perhaps a bit sooner than that. Upside value while we hold above 11 pence. Now really that should do the trick. On to Empire Metals, which has been one of the better stories on a fundamental basis of the recent past. We've got a sort of a revisit of the chart now. Looks like we're in a rising trend channel from June. We need to break a resistance line from last month around the 4.9 pence level. Above that we're looking for up to 8 pence by the end of next month, so that'll be interesting to see whether the company can deliver something which will give us that. But this looks like a mid-move consolidation, and we'd have basically another 3 pence on the upside, equal to the first 3 pence that we had from July to the beginning of this month. Onto a stock I don't normally cover, but we've got Finncap on a rather dull day for the small caps. Here we've broken out of that falling trend channel that the shares have been in since the turn of the year, and again interesting as in the case of Senkos, which I looked at the other day, that the brokers are back in business. Interesting given the fundamental backdrop, but above the 50-day line at 9 pence, we're looking for 16 pence as soon as the end of next month, so a nice turnaround there for Finncap. Another turnaround situation is, or it looks like, Genflow. Here we've broken out of this falling wedge which has been in place since April, and above that the resistance line there at 2.2 pence, looking for 4 pence as soon as the end of next month. The 50-day line already rising, which is always good near the lows. We're still near the lows. Unfilled gap to the upside back in April, which is a plus, and then bullish divergence over the last month going into that little bear trap below 2 pence that we had yesterday. So it looks like a little flush out of weak hands and then up for Genflow. On to another stock which I don't normally look at because it's rather bigger than most of these small caps, but just interesting to see IWG break through that April resistance line. Another one after a rising 50-day moving average consolidation. We've got RSI above the RSI support points at or above the neutral 50 level on 3 or 4 occasions. And the view now is that an end of day close above the 200-day moving average of 161 pence could take us up to 200 pence by the end of next month. That's a very nice inverted head and shoulders there from May, and we gapped into the right shoulder, so that adds extra excitement in terms of maybe catching some of the bears out. You can also see that off the lows we had bullish divergence, and so that's ticking the boxes that we like in terms of potential turnarounds. Already had a turnaround at Light Science, and here it looks as though the shares are potentially regrouping. The initial target there around 1.6 pence now becoming support. Hopefully we'll go back to 2.5 pence and retest the initial resistance of last week for August, and then after that, maybe by the end of next month, we're up to 3.7 pence to fill that massive gap to the downside that the shares delivered back in April. On to MobilityOne, which has not been here for quite a while, and you'll probably see why on the daily chart. Here we've broken out of basically a falling wedge or triangle in place since the turn of the year. Above the 50-day moving average at 4.6 pence, we're looking for the shares to perhaps head up to as high as 9 pence by the end of next month. Obviously it's a punchy call. If you're more conservative maybe in your attitudes, then maybe 6.87 pence at the top of that gap there, or that gap area, middle of that gap area, would be the destination by the end of this month. But looking for a 9.5 pence by the end of next month, and supported by a long bullish divergence line there since April. On to another requested stock, which is not exactly the most liquid around, as you'll see from the chart, but we've got Enteq Upstream, which is bursting back into life, and here you can see that we've actually had effectively a mildly rising trend channel base in place since this time last year. It obviously doesn't feel like it, we've just gone straight down from February, but above the July resistance there at 9.3 pence, looking for 16 pence maybe by the end of this month. Bit of bullish divergence coming in there, but obviously, as I said, this is not exactly the most liquid stock on the market. Now we've got a couple of stocks which I tend to get confused by, and you'll see why perhaps. First is Skinbio, which has broken out of its U-shaped or V-shaped bull flag, a bit like Edenvile has, and here you can see above 18 pence, and the July peak, we're looking for the shares to progress within a broadening triangle from this time last year, heading as high as 31 pence by the end of this month. Ideally we stay above the 18 pence level in the meantime, and only really back below 16, and that broken line from November delays the upside scenario. Moving along to Shield and Shield Therapeutics. It looks like it's in a mid-move consolidation. The old target here was around 10 pence. Above that, we're looking for 14 by the end of this month, rising 50 and 200-day moving averages, and we had a golden cross at the turn of the month. On to the last two, and the first one is another stock which is relatively obscure but makes the grade on a dull day. We've got Smartspace Software breaking out of the recent consolidation and breaking above the 50-day moving average at 38.5. Above that, we're looking for the shares to head up to 58 pence as soon as the end of next month. Maybe there'll be a sort of spike that we had back in May over the next few weeks. On to the last stock, which is URA Holdings, where the market's been rather slow to appreciate having Andrew Austin on board, the Maverick. Here we've got a rising trend channel that's been in place since back in November. Top of the channel there, initial target here up to 3.1 pence, and above that looking for 4 pence, maybe as soon as the end of this month. Ideally we stay above that 50-day line onto the bear trap below around 2.4 pence. That's it for me today. More updates tomorrow.